Hey, you probably heard about depreciation and tax write-off that come with real estate, but did you know that there's two ways that you can actually also write off land? Well, right now I'm going to share with you how that works. So you ask any CPA, any person know anything about taxes, and what they tell you is the number one drawback of land is that you cannot write it off. And you know what? On the surface, they are 100% true. A house you write off over 27.5 years, but land typically cannot be written off. Because even if the house burns down, guess what? The land underneath is still there. Land does not depreciate. Land does not get rotten or anything like that. But termites eat the house. Wind blows over the house. If you don't take care of your house, over time it falls apart, but the land underneath is just stable. So as a result, the IRS basically says you cannot write off land. However, there is two ways that you can actually get around that and still get a write-off for your land. And here's how you do it. Let's jump into this right now. Okay, so first of all, let me say, it's true that there's really no way to write off land while you hold on to it. However, if you ever buy a piece of land that has, let's say, the remains of a house on it, then you can actually demolish the remains of those house and write off that against the purchase price of that property. So technically the CPAs are correct. If you hold on to land, you cannot write it off. So the methods that I'm sharing with you right now, they actually require for you to get rid of the piece of land. The first way is by donating it to charity, but not just to any charity. Here's the thing, here's what the tax law says. If you donate something to a charity, you can only write off what you paid for that item. So in other words, you buy a piece of land for $100,000 and you donate it to XYZ, to just a random charity, you only get a $100,000 write-off. However, there's an exception to that. If that piece of land is worth, let's say, $500,000, and if you donate it to a charity that actually is in the same business as the item that you donate to them, you can actually write off not just what you paid for it, but the full value of the item. So let me put that into a concrete example. Let's say you're following our land profit method and you know how to pick up pieces of land at 10 cents on the dollar. So you're picking up a $50,000 piece of land for $5,000. Okay, all good and well. Now, if you just donate it to your local church, all you get a deduction for is $5,000. However, there's charities like, for example, Habitat for Humanity that are in the business of building houses on land, and their core competency in what they're doing all day long is buying pieces of land and then building houses. Buying pieces of land and building houses. So therefore, if you give your piece of land that you bought for $5,000, but it's worth $50,000, if you give that not to your local church, but to Habitat for Humanity, and Habitat Humanity is in the land business, Habitat for Humanity is going to appraise the piece of land. The piece of land is going to appraise at $50,000, and Habitat for Humanity is going to give you a donation receipt for $50,000. And you are going to be able to write off $50,000 against your taxes. So in other words, you paid $5,000 for the land, but you're getting a $50,000 deduction. Now, depending on your tax rate, if you're at the 30% tax bracket, that means you're saving $15,000 in taxes. You spent $5,000 for the land, but you're receiving $15,000 back from the IRS as a tax deduction. Now, how cool is that? Right there is a threefold return on investment. You tripled your money, but not by selling the property, by actually doing something good, giving it to a great charity that builds houses for low-income people, and at the same time, you're taking your $5,000 and turn it into $15,000. How cool is that? By the way, if you enjoyed this, make sure you subscribe to this channel because there is tons more videos like that coming up. The second way that you can get a huge write-off against your land is by actually converting your piece of land into what's called a conservation easement. Now, that's not an easy way to do. That's particularly something if perhaps you buy a large piece of acreage in an area that has like some protected birds and things like that, or has some swamp areas or some marsh areas that would be very, very interesting for the environmentalist community that basically says, hey, we shouldn't build in those areas, we should protect them. Well, here's what you can do. There's an entire industry that specializes in that. You work with that industry. They're going to go appraise the land at what they think it's worth, which is usually a very high amount. And then they're basically going to put it into what's called a conservation easement. And if you donate that land into that conservation easement, then you get a dollar for dollar deduction for what the property is worth, not what you paid for it. So it's very similar to the donation to habitat for humanity situation. I've seen some extreme cases where people have picked up properties for $10,000 and then got something like a $40,000 deductible, or where they picked up a property for $100,000 and then got something like a $500,000 deductible. So basically, for every dollar they paid for it, they get $4 to $5 in a tax write-off. Now, here's a caveat to that. This is a high-risk strategy. The IRS does not really like you to do that. It has a very high risk of being flagged. So make sure if you do that, you work with a really good CPA, you work with a really good conservation easement company, and you don't stretch the envelope too far. You don't abuse of the system, and you don't, because sometimes there's ways that you can overestimate the value. And again, the IRS does not like that because obviously it takes money out of their pocket by you being able to get these huge deductions. But it is something to know about, because done properly, done conservatively, and done in the right way, it can produce a huge deduction from your taxes. So here's a third way that's kind of like borderline land. Sometimes, particularly if you're a fix and flipper, or if you're a builder, or if you're looking to build from the ground up, you might come across a piece of land that still has like a tear down home on it, where you really there's no value in the home, but the value is really just the land. The house might not even be livable. It might be some kind of a shack or just 3 walls and half a roof or so, something like that. Well, when you buy this land for just the land value, it's still going to cost you money to actually tear down the remaining walls, tear down the remaining shed, remove the leftovers of that house or whatever is on the property. Well, guess what? When you do that, that cost of removing the property, that cost of removing the walls, that removing the kind of like the demolition cost, you can actually write that off against the purchase price of your property. So right there is a way that technically there was nothing of value of the property, but it still costs you money, so you get a write-off of that money against your land value. That's a little bonus way to also make sure that you can get at least some write-off. But again, it's a niche strategy that only applies when you buy something that has still something on it. All right, so with that said, if you want to know how to get pieces of land, if you want to know how to find these pieces of land that you can get dirt cheap so that you can donate it to Habitat of Humanity, that you can donate into a conservation easement, then simply go to landblueprint.com, where we have a 30-day blueprint that helps you show you exactly the step-by-step path to finding these deals, and also if you want to flipping these deals in many different ways, making you profits from the comfort of your home without ever touching them and without having ever to deal with tenants, toilets, and termites.